Hi everybody, I have finally sold off Disney and buy one new US REITs. On top of that, I also have buy more for two existing REITs holding and one existing SG stocks. I'll elaborate more in this video and also review my existing REITs portfolio and also share with you my plan for 2025 on my REITs holding. So now let's get started. This is my stock portfolio as of 2nd of January 2025, where I have 12 US stocks and 12 Singapore stocks. And what are the changes that have been done since my last update for the portfolio of 30th of November 2024? I have completely sold off Disney at a profit. The reason why I sold off Disney is that my US stock portfolio have hit the 40% portfolio weightage. Although I allocate 50% weightage for the US stocks portfolio and the Singapore stock portfolio, I would like to have a minimum of 10% cash balance for the US stocks portfolio and also the Singapore stock portfolio. This is just in case when there is a big market downturn, I will have capital to buy more counter at a good price. And thus, I have decided to increase my risk exposure for the US portfolio. In order to have more cash, I need to sell off a counter, and thus I decided to sell off Disney after taking a look at all my existing US counter. I may or may not buy back Disney in the future when my portfolio size become bigger. The new stocks that I buy in is the REITs. The new US counter that I buy in to replace Disney is Equinix, and also I take some of the proceeds from Disney to add more into VG properties. And for the Singapore side, I have even add more position into Mapletree Logistics Trust, which happened to be one of the worst performing REITs in Singapore market for 2024. But over the past 10 years, Mapletree Logistics Trust was one of the top 5 best performing REITs. And for last year, it had a pretty bad performance. One of the key reasons is because it have China exposure, and also that I feel that this REIT is very well managed, and I foresee there is a good prospect for the REITs to turn around, and this is where I decided to add more to this REITs on the last day of 2024. Another counter I have add more is Capital Land Invest, which have a very big China property exposure, and it was also down quite a fair bit over the past few years. And I take this opportunity to buy more average in Capital Land Investment for the month of December. This is my holding, and I try to restrict a portfolio to have not more than 5% holding. But from here, you can see Mapletree Logistics Trust have slightly exceeded. It had 5.03%. This is due to the daily price fluctuation of the stock market. And the one have the lowest holding will be the two retail REITs, which is Fraser Centrepoint and CICT, Capital Land Invest Commercial Trust. And my total Singapore portfolio holding is 34.71%. Let's look at my 12 US counter after selling off Disney, and I replace it with Equinix and adding in VG properties. None of the US counter have more than 5% holding, with Nike have the biggest exposure of 4.29%, and Equinix, which is the latest addition, have the lowest exposure of 1.83%. And my total US portfolio holding is 39.17%, which that means that if I were to want to add more to my US counter, I may need to trim some other counter. Currently, I still have a cash balance of 26.11%, which can be used as a reserve if there is a good market correction or any black swan event were to happen. This is my portfolio since the day it started in January 2022. We can see that the profit have steadily increased compared to the capital invested over time. And similarly, the dividend have been increasing due to more capital being injected into this portfolio and more dividend payout over time. As this portfolio has been running for 3 years, and it's supposed to be more of an income-focused portfolio. Let's look at the dividend you have collected over the past 3 years. It started at year 2022 with the total dividend collected in Sing dollar term is slightly more than $300. And at year 2023, the dividend collected have more than doubled and it crossed the $1,000 mark. And year 2024, the dividend have further doubled compared to year 2023 to cross the 2,500 mark. Going forward for 2025, I will expect the dividend to able to continue to grow, but I will not expect it to double again compared to the past 2 years, as the past 2 years is the initial state where capital start to inject it and the portfolio start to grow in size and the snowball effect start to come in. And at 2025, I will expect dividend continue to be growing, but will be at a slower rate. Let's look at my unit trust portfolio. There's no changes for the month of December, and I still have 18% parked in a short duration bond fund with the Nikko AM short-term bond fund. This is the capital I have parked one side to reserve for in case there is a market swing where I can deploy more to the equity. And this is the performance of the portfolio which have turned around since October 2023 and it never looked back, and the profit having steadily widening compared to the capital invested. Now let's look at my new holding on why I decided to buy Equinix. I constantly want to add a data center REITs into my portfolio, and after looking at the data center REITs that are available in Singapore and US, I decided to buy a US data center REIT, and I decided to pick Equinix, which is one of the top 10 largest REITs in the world and also the largest data center REITs in terms of market capitalization in the world. So when I want to buy a REIT, I always believe its size really matters, and this is one of the key reasons why I buy Equinix. On top of that, Equinix also have a very fantastic performance. It have actually 268 data center in 73 metro. Although the number of data center is less than its competitor, Digital Realty, but in terms of market cap, Equinix is the number one. And one of the key reasons why I choose Equinix is that it have a 87 consecutive quarter of revenue growth. And this makes him the only S&P 500 counter that have achieved 87 consecutive quarter revenue growth. The other 499 counter not able to achieve this. This makes this counter very unique. And next is the proven track record where it have a 10-year analyzed equity returns of 18% up to year 2023, which make it perform even better than S&P 500. So this is where the data center is located for Equinix. It have across 6 continents, 34 countries, over 73 metro area, and you have total of 268 data center. As my portfolio is focused on dividend growth, this is another key reason why I choose Equinix over its competitor data center is that it have a CAGR of dividend growth of more than 10% over a 3-year, 5-year, and 10-year periods. Although the dividend yield is low, but it has been very well compensated by the share price increase. And on top of that, the compounding growth of its dividend, it is a double digit, which not many stocks in the market that are able to achieve a double digit compounded dividend growth over a 3-year, 5-year, and 10-year periods. And this will indirectly translate to a good capital appreciation of the share price, which resulted in a very good total returns for Equinix. So now let's look at my current risk portfolio holding. So currently, I have 2 retail REITs. One is Fraser Centrepoint, and the other one is Realty Income. And for the diversified, which is actually a retail and office REITs, it is more inclined also towards the retail. I have Maple Tree Pan Asia Commercial Trust and CapitaLand Integrated Commercial Trust. And for the hospitality REITs, which I have VG Property, which they call it also an experimental REITs, but ultimately is in a gaming and hotel business. So actually broadly classified, I can also put it into the hospitality REITs classification. And next, I have the industrial REITs, CapitaLand Ascendas REITs, Maple Tree Logistics Trust, and Equinix. Industrial actually encompass data center, high specification building, business park, logistics, which is the warehouses, and also the industrial buildings. And thus, I put all these 3 under the industrial REITs category. And lastly, I have one healthcare REITs, which is Parkway Life. And total, I have 9 REITs in my 24 stocks portfolio, where 6 are Singapore REITs, 3 are US REITs. How does this 9 REITs perform? This is a past 1-year return of the 9 REITs, and I plot it against 2 indices, which is the XLRE, which is a S&P REIT ETF, and REITR, which is the IH Singapore REIT total returns indices. For the past 1 year, the REITs that have the best performance, which is Equinix, which have a total return of 18%, and the worst performance, which is Mapletree Logistics Trust, and it happened to be one of the top 5 worst performing REITs in Singapore REITs. It have down 21%. And this is where I feel that it's a good opportunity for me to average in these REITs for the month of December. And if you were to drag the time frame longer, over a 5-year time frame, we can see that Equinix and VG, followed by Parkway Life, are the top 3 best performing REITs, which have a total return of close to 36% to 76%. And all the REITs actually perform better than the Singapore REITs Index total return, which have a negative 10% return over the past 5 years. However, you can also see that Realty Income actually have a negative 5% return, which turned out to be the worst performance among all my 9 REITs over the past 5 years. Right? And let's drag it longer to since October 2015 is slightly more than 9 years. Equinix is the runaway leader. We deliver a 279% return. So despite the low yield of less than 2%, but because of its high CAGR for its dividend growth and also good capital appreciation, you were able to compensate for the low yield on that. And over the past 9 years, none of the REITs have delivered a total return of negative, with the one that have the lowest return will be the Capital Land Integrated Commercial Trust, followed by Realty Income. So this is my REIT weightage based on the current market values. My industry have the higher holding. You have a total weightage of more than 37% for the REIT portfolio, followed by the retail, which includes some office commercial properties. We have about 36%, slightly lesser than the industrial REITs. And next is followed by the healthcare, which is Parkway Life got 13.7%, and VG Property, which have 12.4%. And for VG Property, where I mentioned before, it is more for a tactical allocations for my REIT weightage. At a 12.4% weightage, I will not expect to add more to VG Properties in the near term unless my REIT portfolio continue to grow. Let's look at the dividend yield. The portfolio have a dividend yield of 4.57% of all the 9 REITs combined together, where I'm able to achieve a projected dividend yield of 4.57% for the year of 2025. And from the dividend weightage, Mapletree Logistics Trust contribute the most with comprised of 25%. If Mapletree Logistics Trust were able to increase their dividend payout for 2025, then my dividend yield may able to increase further because it contributes 1/4 of the total REIT dividends. And Equinix, as I mentioned, the yield is low, and also because their weightage is also one of the lowest, you only contribute 1.7% of the total dividend. One thing to highlight is Realty Income. It contributes about 7.5% of the total dividend for my REIT portfolio, despite it having a 13% weightage. When you compare with these 2 local REITs, which is Fraser Centrepoint and CICT, which have a combined market value weightage of 11%, which is less than Realty Income, but they have a much higher dividend yield compared to Realty Income. And I have looked at Realty Income over the past few years. Its dividend growth rate has started to slow down, and the dividend growth for the last 12 months is not even 3%. So I feel that there may be some challenge for Realty Income to continue to grow their dividend at a good dividend growth rate, despite that their dividend is still able to continue growing and they are able to pay money income. But due to a low dividend growth rate, I may consider to replace it with another REIT when there's opportunity, or I may still keep this if that dividend growth able to recover to a more promising rates. That's all I have to share with you today. And if you find that this video have benefit you, do remember to like, share, and leave your comment below to let me know what you think. I shall see you in my next video. Bye-bye.